We're back for another session of trade reviews. Hopefully, we'll have at least one trade that somebody took. Besides my trade, I have taken a trade. I like my trade because it's a very, very good teaching trade. So I really like that trade. And I want to start with that trade. Because last week, man, if you remember, as we were looking at the cues, my bias is still bearish, even though since the early part of March we've been really driving up. But if you look at let me go to daily. If you look at broader view, we still have a long ways to go before we claim back the highs. So based on that, I still biased to the downside, still have that bearish bias. So last week I said if we come down to this demand zone, then I will take it to the upside to target the supply zone, right? We have this supply zone and we have this demand zone. The other thing I said is if we have a lower high somewhere here, a lower high, I will take it to the downside to target past the demand zone, right? Those were the two conditions that we discussed. The third condition is what happens if it just wants to go up. I said because this is sideways, we need to reassess, right? I didn't want to give a scenario because I was not comfortable with the scenario last week. I was not comfortable with the scenario on Tuesday that said I'm going to do this to the upside. I just didn't have that. Like lower highs, lower lows. So a lot of, but even though it's lower highs, lower lows, it's really tight range. I just didn't see. I didn't have comfort to take this to the upside. So that was my expectation. That's what we discussed last week. And something quite interesting, right? We got exactly what I asked for. A lower high, right? That becomes my area of value because lower high, an inverted hammer, next bar to the downside, I'm taking it to the downside, right? So that's my expectation. So next bar, it started below, so I took that trade. This was my stop. This was my stop. So we can get out of this because we've already discussed it, right? So this bar, I wanted to the downside. This bar, a penny below, right? You already know my style is a penny below my entry. I'm taking that trade. There's this gap, right? I said at the very minimum, even though my target is somewhere here and really targeting down here, at least I have this gap as something to look at, right? If it stalls at this gap, I can exit. That was my expectation. That didn't happen. The whole of Wednesday, price just kept pushing up, right? The whole of Wednesday. And I was close to my exit. I didn't exit at that point, but I was close to my exit. That's part of trading, right? You don't win all of them. The last few weeks, with everything that we said happened. This week, it didn't happen, right? So we're okay with that because we control our position size, we control our exits. This stop is not what we got because it opened up here. So my exit was much higher. Instead of 313 and change, it's 315 and change, right? That's part of the game. You have to expect that. So we gapped up and my exit got taken out. So that's why I wanted to talk about this trade. They're not always winners, and we have to be okay with that, right? We have to not hold on to it in hopium. Once it's up here above my stop, I'm out. I'm done, right? There's no more conversation about this trade. The only thing I want to look at that moment is, okay, I missed this. I want an entry to go to the upside. but I didn't have enough of a pullback, right? I don't want to tell you I took another trade because I didn't. I didn't see enough of a pullback for me to enter another trade. So this week for me was just this small loss here, which is part of the territory. So hopefully that gives you, some understanding that even if you're very experienced, you should not have an expectation of 100% win rate. Anybody promises you 100% win rate, I highly recommend you run away from them because it's just not gonna happen. It's just not gonna happen. This gap, for all practical purposes, for me, this gap is filled when we went halfway, right? That's why it's not on my drawing, but I want to redraw it for you to see why it's not there, right? Just in case you had noticed this gap. So this gap is still there. This supply zone is still in there. Its price is struggling. Today we had a down day, but not that strong of a down day because we made lower high, we didn't make lower low. Price since March keeps grinding up. It just keeps grinding up, and the 26%, the 23% retracement is way down here now, because now we start from here. Actually, you can say there are some moments, right? So from here, we didn't capture 38, we didn't capture 38. Up here, we captured 38. Right, so I just forgot to redraw it. So this is my new drawing. So based on this, is somewhere here is a nice pullback. For me, it's green to green is what I prefer if we were to take it to the upside. If we come down, pull back somewhere in this area and we get a nice hammer, that's our area of value. We get a nice hammer, we take it. Especially if we get it in this gap here, which is close to that 38.2, right? That gives us a nice area of value. We take it. This purple line was a stop from last week, I think. So here's what I have seen. So I just wanted to make sure you had a chance to see my loss as well. It's not always my wins that I want to share. So with that, Manny, any trades that you took this week?
Yeah, I actually took a couple last week.
Okay.
Did you want to share my screen and show, or do you want me to just kind of talk about it?
Yeah, let's just talk it through, and
Okay.
you can just explain to me what you did. Which ticker?
Yeah, let's start with SPY. That was the first one.
Okay.
So on SPY, on March 23rd, or sorry, March 15th. Did we already cover this?
That's a that. So we have to start after 28.
Got it. Okay. That was I think that was the week before. Yeah, so let me go to the Qs then.
Okay.
So on the Qs, on the 27th is when I took my first entry. So on the 27th,
So the 27th was before we discussed, right? So
yeah, but my entry was that day. My exit was later.
Okay.
That's why.
All right.
Okay.
So what was your entry?
Yeah, so on the 27th, we had kind of just that big upward move momentum for that entire move. And then right there, that was kind of nearing the supply zone that we
Oh,
had.
so you took this exit on Tuesday. So we already talked about this exit as well.
Uh,
It's to the downside, right?
yes, actually, you're
Yes,
right.
yes. So
Yeah, we did.
last week Tuesday we talked about this trade as well,
You're
right?
right.
You
You're
had
right.
this inverted hammer,
Yeah.
and you took it to the downside. I think
Yeah.
the somewhere here in
Yep.
the 309 area. I think it was where you took your
Yep.
exit, something like that.
Yeah.
Yeah.
That's exactly right. Yeah.
Yes.
Okay. Yes, that one we talked about. Okay. The
Yes.
next one after that, the one I took is on um, the 30th, a Thursday.
Okay.
So
So
we
that's the one
saw,
I'm interested to understand now your logic.
yeah. So I mean, we were just kind of on a continuation. Um, I had exited, like I said, on that Monday, and then um, I saw that chart kind of bouncing back close to the demand zone, maybe not quite there, and then bounced up. And the next day, it had a huge gap up, um, and then a consolidation, and then another huge gap up. So I saw that as another demand zone. And then I saw a nice retracement, maybe not like the steepest retracement, but it formed a nice hammer right there. If you
This is the hammer.
on the 30th.
Yeah. So this bar here that I'm on is the hammer that you're referring. You're
Yeah,
right. I mean, it's the retracement hammer. So if
yeah,
you if you do this fib somewhere here,
mm,
it didn't come quite as much as we'd like it to, but
yeah,
again, to me, that green to green is a personal preference.
yeah,
If even if it's a shallow pullback and you see a hammer, you want to take it, that's perfectly fine.
yeah.
Just
And
but
the reason I
make
think,
sure you journal it. Make sure
yeah,
you journal why you took this trade.
yeah. And the biggest thing for me is I kept a really tight stop loss because I knew it was approaching that 78.6.
Yeah.
So, and I have a long term, I know I have a downside bias, right? Short term,
Okay.
though, it seemed like just a big move. So I said, hey, let me keep a tight stop. And a hammer always gives you that opportunity to get a tight stop, right? Because it's not a huge range. Like it's not a flag or it's not railroad tracks or a big engulfing bar where potentially you can have a wide stop. So I said, it's a hammer. I can keep a tight stop. So I did that. And then I entered um, the next bar at just a penny above
Yes.
the
Okay.
hammer.
So
And
I've
then I
set that up
exited.
for you.
Yeah. And I exited right below the 78.6 um, at right at
So you pretty much exited
17.
the position same like the very next day,
Yeah.
right? Like this
Yep.
bar, the opening bar of the very next day.
Yeah. I told myself, 78.6, that's been a strong 78.6 on that
Okay.
resistance. So I just exited right away. I could have, I guess, in hindsight, I could have kept a runner in there, and then just let it run for a couple more hours. That would have been probably 2x, and that would have been my full, full goal. But I just decided to play conservative on this one. So that's
Okay.
kind of
So
a trade.
I just want to say one thing. I think you took this trade for the sake of taking a trade. The reason I say that is your your ratio. Look at your ratio. It's 0.7. That's a
Uh,
terrible ratio.
when I did it, it was at least one. Maybe I
Well, okay. I let's make it one. I mean, I don't know how you're gonna make it one. Like this stop is like extremely like unforgiving kind of stop, which kind of worked in your favor, but uh, so that's why I'm saying this was not really a good trade. It worked out, right? It's
mm,
as long as it works out, it works out. But you should always think about what if it doesn't work out, right? And do I have are my stops at least wide enough to let it have breathing room to continue to the upside? That's one. But the second part is you already said it, right? You didn't leave like half of your position open, because what you can do is, as soon as you take your exit, right? As soon as you take your exit, you move your stop. So if your stop was here, and here's your entry, you move your stop slightly above your entry, and you're golden, right? At least for that day. And you wait,
Yeah.
and if you want to exit at the end of that day, that's fine, right? That you exit at the end of that day. I think
Yeah.
that's part of the learning. I like that. I mean, your trade was good, but the only thing I didn't like is that you wanted a very tight stop, and your exit was not, better than 1.5.
Yeah.
Now, if you say, here's one thing to really think about, right? Remember, I showed you a few times that I can exit at point 0.5, I can exit at point 0.8, but that's
Mm.
because price stalls. That's not my initial target, right? I didn't say I'm going to exit at, point 0.5 risk reward. But
Yeah.
price at 78.6, I know it's a challenge. If it goes there and it reverses, or it goes there and it goes sideways, it's a sign to exit. But in this case, it went up to it, touched it, and then the next bar it went past it, right? So for that whole day, it just kept driving up,
Mm.
which means your 2x, even at this tight stop, your 2x would come at the 10:30 bar,
Yeah.
right? Like
Yeah.
4 hours later. So your 2x comes 4 hours later. That's fine. And if you want, as price is as price is driving, if you're afraid that we might stall here, you just move your stop. Like, you
Mm.
just move your stop like halfway of this bar, right? And then if that doesn't happen, this takes it out. You can just keep moving your stop, halfway of this bar or the bottom of this bar. You can just keep moving your stop up, but you have your 2x target set. Even if you're not looking at it, it hits the 2x, you're out,
Mm.
right? Then you'd be fine. And in that instance, you would have stayed in this trade. This trade would have still been good for you, because half of your position just remains. You just have you just keep moving your stop,
Yeah.
right? And so maybe your stop is here. If you had just let it go here, or even if it was up here, at least one part is 2x, one part is 1.8x, and that's fine. So,
Yeah. Now this is
yeah,
definitely a good
yeah.
learning one. Yeah.
But overall, your thinking is perfect, right? Good.
Mhm.
My only hesitation was you didn't give yourself a good target.
Yeah.
So don't have fear. What if you were wrong and you lost? That's okay, right? I think your
Mm.
tight stop and your exit at that level says you are afraid. You're afraid to lose. It's okay to lose, right? We want the consistency, not the perfection,
Yeah.
right? You want the
Okay.
consistency. And if you're doing 2x, you just have to be better than 33%, right?
Yeah. Yeah.
So,
That makes sense.
yeah.
Totally. Yeah.
Of
This
course,
is
we want
definitely.
much better than that, because we want to keep accumulating, the funds for bigger and bigger positions. But uh,
Yeah.
yeah, but it's
Yeah.
good.
No.
I like
Totally.
that trade.
I took one last one. This is
Okay.
just on. This is actually on a stock, so it's on Tesla. This actually it went my way, but it was just another good learning opportunity where I didn't execute fast enough.
Okay.
So again, Tesla, we had that nice big move up, and then it opened the next day. Really today,
What
this
what day?
morning.
What day we're
Yeah,
talking about?
we're talking
To,
about actually yesterday. So if
okay.
you see,
Yesterday we had a gap
yeah,
down.
gap up the day before, and then a huge gap down.
Yeah.
Um, and then on the gap down, if you look, if you zoom in a little bit, that forms a nice hammer at the bottom of that. Um,
Here. Okay. At
yeah,
ten
right.
thirty, the 10:30 bar. Okay.
Exactly. So I saw that 1030 bar. I say, hey, and then the next bar I entered a penny above. um, above that.
Okay, so here's the chart, right? Here's the recent fib, and because I always like to see retracements.
Yeah.
Here's where you are.
Hmm.
When this happens, you're saying I'm close enough to 38.2. I see a hammer. I want to take a trade.
Yeah, and it was pretty clean in terms of the hammer. You
Yeah.
kind of look at it, it's a clean hammer, there's nothing around it. You can see like the day before there was a huge upward pressure, so there was a huge gap up and obviously a big retracement. And so I said, you know what, let me take a chance. It's kind of I blew past that was the supply zone right there, right? So it kind of just blew past right in the supply zone. And then I said, let me see what happens, right? And
Where's the supply zone?
um, that supply zone um, is kind of in that consolidation area. So you see, you move up, consolidate, move even higher, consolidate, move even higher. So there's kind of two consolidation zones right there.
So this is your supply zone.
Or
Demand.
sorry, demand zone, I should say. Um,
So I mean, supply zone would be up here. Demand zone would be down here.
Yeah, but there's another demand zone right there. Wouldn't you call that between Wednesday and Thursday? Just that area?
Between Wednesday and Thursday.
Yeah. So that one right there, I said, hey, one supply zone right there,
So demand zone, you mean?
or demand zone. Correct. Yeah.
So you want to make this a demand zone?
Yeah. Yeah. I made it a little tighter, but yeah.
Okay, I mean something like that.
Yeah. Something like this.
Okay. So in this demand zone, uh, it's actually like this. Maybe that's this consolidation. In this demand zone, we came there. It's also close enough to 38.2. So you want to take this trade to the upside, a penny above. So you're thinking some liking, so right? So
Yeah.
you uh, and then your stop. Did you say I want to have a tight stop?
Yeah. Fairly tight.
Okay,
Not
and
like
then
too tight, but
yes.
I mean, it's yeah, right there. That was supposed to be my my exit. And then so
Did
I
you
entered that.
exit?
I did not exit. I missed the mark. The market opened and I had a huge gap up, and within a matter of 2 minutes, it gapped back down. I was just as I was watching it with my bare eyes, it just it reversed immediately within a matter of just the first 5 minutes of the market opening.
Okay, can
So
I make an
unfortunately,
assumption of the mistake that you made? And then
yeah,
you correct me if I'm wrong.
okay.
When you took the trade, you did not set an exit.
I did. It even triggered my exit, and I said, okay, let me. This was like 6:30 in the morning, so maybe I wasn't moving as quickly as I normally
No,
would
no, no,
have.
no.
to
So
exit.
let me rephrase it. When you took the trade, you did not place an exit trade. You have
Yes,
an exit in your head,
yeah,
but not
I
on the
had an.
platform.
So I did not set a trade, but I set an alert.
Yes.
I
So
had
that's
set
the
an alert.
mistake, right?
I did
That's the
not.
mistake.
Definitely. Yeah, I haven't
You,
done that.
no matter what, because we are not 5 minute, 10 minute, 1 minute chart traders. We do not have the luxury of not setting an exit.
Mm.
We don't have that luxury. So in our style of trading, because we're using the 1 hour chart and
Yeah.
we want to walk away, we have to set an exit.
Mm.
Now, if you had said my the price came within a few cents from my exit and I missed it, that's perfect, right? Because there's nothing you can do about that.
Yeah.
So price is going to do what it wants to do. But
Mm.
if your alert hit and you did not exit, that is something definitely in big, bold red pen in your journal,
Yeah.
right? I
Yeah.
did
This one.
not exit this position because I did not. put the trade ahead of time.
Yeah,
Before
definitely.
you enter the trade, you have to know what that exit is, and you have to place that trade.
Mm.
Okay, so I love this teaching moments because this is how people give up gains. You had this 2x gain, it's exactly 2x gain, and
Yeah.
you just saw it evaporate. Now, the other mistake now, there's two mistakes, right? You didn't set this, and you didn't set this. Neither one of them are set.
Yeah.
So now the worst case scenario for you is we gap down to more. That's the worst case scenario because now not only did you give back these gains, now you're gonna lose money on this trade. You should have already lost money. You should have had the stop already placed, right? If
Yeah.
if you had done both of these and you came within pennies and you lost, fine, no problem. Which I would say is a different teaching moment. I'll address that in a second. But because you didn't set either side, now you're leaving yourself up for a very, very big loss.
Mm.
Instead of, you know, a, a 2.0 ratio, it's a -3 ratio if we get a big gap down. Because look at this gap down, right?
Yeah.
When you measure this gap down from this close, we could come open here.
Mm. Yeah.
Actually, you have to measure it from here because this is where it opened first.
Mm.
So we can open down here. That's that's the part that you have to be extremely careful, right? So, but it's good teaching moments. And the other thing I wanted to address is another mistake that I see. I have done it in the past. Many people do this mistake. Price comes within. So this is where you need to go to maybe the 10-minute chart, maybe even lower. You see this bar? It's an inverted hammer. Let's
Mm.
say price comes within pennies of your exit. It doesn't hit it, and you get this inverted hammer. It's time to exit. Don't hope that it's gonna come back up because it's already told you, hey, inverted hammer. Nothing on my left side that says this is a bad inverted hammer. This is sticking out like a Thor stamp by itself, right? So it's
Mm.
telling you it's time to exit. So I showed you the 10-minute bar to make it clear, right? Like when you miss and it starts to go down, we don't need this. So it goes up, you miss, and it starts to go down. You need to exit, right? You might be able to see it on the 5-minute railroad tracks. But
Mm.
very, very clear indication. Like 5 minute, it's an inverted hammer in any time frame. If you have the time frame, it's railroad tracks. So
Mm.
it's you would have seen it very, very clearly. You see it missed and it starts to go down. You might say, you know what? I'm just gonna exit, right? I'm gonna exit as soon as it missed. Uh, or you might say, let me exit half and let me move my stop really, really tight to this gap. Right now, this is a profitable trade.
Mm.
Your trade was good, but I'm just pointing out what I don't like about that trade because if I don't point that out, it's not good for you. Because you're seeing an uptrend, perfect. You saw a demand zone could be up, consolidate up. That consolidation area is a demand zone, perfect. So you drew that demand zone. I don't do these a lot. I prefer just the ones where at the turn of the valley. But this is, I've taught this and this is valid. So I'm glad you drew it. You paid attention to everything. I don't know if you had the fib, but that also came close to that 38.2. You get a
Yeah.
hammer. This is like everything worked out, right? This is perfect entry. Everything worked out, except the execution was poor on the exit side. And
Yeah.
so, but journal it. right? Really general why you miss this exit, because you say I should place every time I enter a trade. Like you should have a checklist. When XYZ happens, I'm going to take a trade. But when I take a trade, I also do UVW. Right? So you have to list that. You have to have that checklist because you're still new at trading. Otherwise, you're not gonna remember to uh,
Mm.
take that trade, right? So if you hope for something like this, where you get a hammer, you miss it and it goes down and it reverses, you're hoping for something like this, but that's not what this is giving you, because it's low, it's big gap down, lower high, right? High,
Mm.
lower high, lower high. Uh, you might get lucky and we might gap up, but you can't count on that.
Yeah.
You cannot count on saying, hey, like if I was supposed to exit here, I don't exit. Look, I'm in a lot of pain, a lot of days before it goes back up, and you know I got lucky. But here, if I don't exit, look where I am.
Mm. Yeah.
Right? Especially if you're playing options, you don't have this luxury to wait until it comes back here, because your options are already losing a lot of value.
Mm.
Especially Tesla options, they're expensive, right? So you're not gonna buy 3, 4, 5 weeks out options. You're gonna stay within that week, so they're very pricey. So very
Yeah.
good lesson. I actually like mistakes, because those are lessons, right? And I can see those mistakes because I've been there. So hopefully you're not taking it as I'm beating you up. I'm just trying to encourage you to take your exits, because you have the trade. The trade worked in your favor. I think that we had this conversation. That's the disappointing part, is we've had this conversation because of Apple, right?
Yeah.
A couple of weeks ago, you didn't have a stop loss. It happened to work in your favor.
Yeah.
I don't like this luck, because they don't teach you, right? Then you'll
Mm.
use that as, oh, here's my learning. If I just wait long enough, I'll get what I want. If you wait
Mm.
long enough, you'll get what you want if you're investing, not if you're trading. It's like in trading is a little bit dangerous. But
Yeah.
outside of that, I mean, I like the trade. I don't argue that the trade was good. Would I
Yeah.
have taken it? Maybe not. But the only reason I don't take it is because I see this big gap down. But I would have preferred it to come down like to this green zone. But it's perfect.
Mm.
Like for you, it's really a perfect trade. Could not ask for a better trade. It's really a perfect trade.
Yeah.
But now it might come down here. This is my
Mm.
concern. Right? It
Yeah.
might come down here. Uh, if we run this, you see that it really lines up to this area here. So it's
Yeah.
okay. It's all right.
Yeah. This is definitely a good learning opportunity from an execution standpoint. To kind of be vigilant. The first 10 minutes of the day sometimes can mean the whole trade. So,
Yeah,
um, yeah, you really have to stay on top of it.
yeah. And the only way you stay on top of it is you have your exits set in place. Yeah, and you have your target two in mind. You know
Mm.
what you're gonna do with your stop if you hit target one. Those Some of those things you write down. If I get my exit, my next action is move my stop, right? And set the second exit. That's your
Mm.
next action. You walk away, because that thing can happen. Right? In Tesla, the range of each bar, right, could be $7. So you could easily hit your target one, target two, target three, just like that. So unless you set them, you're gonna miss those chances.
Mm.
Don't give back profit. That's the hardest thing. Like, don't give back. Like, if it's your
Mm.
green, it's your green. Don't make it red. But good trades. Guess number you. Any questions?
No questions.
Did you like his trades? Any comments about his trades?
Yeah, I'm a little bit. It's kind of hard to follow as quickly as I would have followed 2 weeks ago, but I'm coming back into it.
Okay.
One thing actually I meant to add, I just remembered now that I'm looking at my chart too. The MACD lined up really well. That was my third confirmation why I took that, even though the retracement isn't as deep.
So what did that? So your market should be very similar to this. What did this tell you to take the trade?
I did it on the hourly, not on the daily, not the hourly.
So okay, still on the daily. So your trade was done this day? No, this day. Your trade was done yesterday, and you should have exited today. So what did the market tell you?
So kind of coming into the week, it just had a alignment, and I don't know if it needs to be to the very day, right?
So
kind of
what I want to see is, if I have higher high, is my MACD also higher high? The answer is yes. So I don't have anything to the downside.
Actually, you're right. Yeah.
And then I don't have lower low here. So yeah.
Must have been. Maybe I'm looking at the wrong chart. Oh, never mind. This is the Qs. Sorry. This is not the. That's not the SPY.
I got confused there for a minute.
Yeah. Sorry, it was the wrong chart.
Yeah, it's moving so wildly. Like, that's why the oscillator is just a nice to have. It's not really a must. But like when it moves wildly, sometimes it doesn't give you what you want. But here, like lower low, it's moving lower low. Here, higher high, it moved higher high. So it was kind of hard from the oscillator to get something different.
On the daily, it kind of shows you, because I think maybe sometimes it's a little easier to kind of spot those. On my side, I had that from peak to peak. If you look at the 14th to the 31st.
14th. So
this is Tesla. You're looking at Tesla. I was talking about Qs.
Okay, let's go to Qs.
There we go.
So from
the 15th, kind of a peak, going to the 31st.
The 15th.
Yeah, it's the previous peak.
So here on the 6th.
One before that.
Oh, this one here.
Yeah, you can set that
this
one.
One here.
That one or both of them.
So this one, no, because this one, look, this one is going down, right? So all of these are going down. Where it starts to go up is from here, from 6. So what I want to see is from here to here, because here, what I'm measuring here is from here.
Okay.
From here to here. Right? I'm not jumping. You could jump boundaries, but you have down here. So from here going higher, it's going higher. Here it's going lower, from low to low. This one is actually, is a good one. Because this is going lower, but this is going higher. So this you can say, hey, this is a good trade for me. So on 13th, when I flip back to my hourly chart, because here's where it is, I get an engulfing, railroad tracks, a hammer, which is like, this is almost like an engulfing. You can say, yep, I saw that divergence, I'm taking this trade. But this is, you see it, right? I see this, I'm taking the trade. That was all good. But it's good that to me it shows me you're using all your tools. You're bringing them together. Just build a checklist so that you don't miss anything. But the most critical thing that I have seen now is you're missing your exits. Do not miss exits. Don't let one trade fool you.
Sounds good.
Any other question? We're good?
I think so. Yeah. I guess my question is kind of outlook. I was looking at the chart for both the Q and SPY. It was a little hard to to kind of think about what comes next and kind of planning out how we're looking at it. So we'd love to get your perspective as we look at the next week.
Okay.
I know we're that demand.
and we didn't set up a trade, which I think we
No,
should
we
set
didn't.
up a trade too. Okay,
Yeah.
good. I almost forgot about that. But let me address your question. So I always go back to the higher time frame first. In the higher time frame, where am I? In the Qs, I'm above that 61.8% retracement, right, which has held strong for 4 months in a row. It held really, really strong. I'm above that, but I'm making lower highs. So I'm very, very cognizant of this lower highs. I'm not ignoring it. But with that, the 61.8 is holding really strong. So that's my starting point. I go to the weekly and I want to see, is there a different story that the weekly tells me? Because the weekly will turn before the monthly, right? So is there a different story? It still says no. I'm holding that 61.8. I'm making lower high, but I'm starting to make, from here to here, from here to here, from here to here, I'm starting to make higher highs. So be careful, right? Don't just say, oh, it's going to go down from here. I'm just going to go to the downside, because it's also showing you there's signs that it wants to go up, but it could be a dead cat bounce, right? It could be a momentary push to the upside. We have this supply zone, right? We've identified supply zones and we're playing in those supply zones. Then we go to the daily, and that daily is where you see here we have this big push down. Within this big push down, we have started to claim that 78.6 retracement. We've started to claim it. So this is why we look at everything together, right? And so from here, if just if price uses this 78.6 as support and moves up, then I'm targeting this next supply zone. I'm targeting this negative 272, negative 618, somewhere up here, right? That's what I'm targeting if it wants to use the 78.6 as support. If not, if it's not claiming that, then if it just keeps blowing through that, then I'm going to start to target the these gaps and other demand zones. So to me, I don't want to think about, is the market going up or down. I just prepare myself and say, look, broader, it's saying we're in an uptrend, but in an uptrend we have a strong pullback, right? And then within that pullback, what are we doing? And so then we come to our hourly chart and say, hey, what's the trade? What trade am I taking? And which way am I going? So I see a couple of things here. I want to see a few trades. I would like this zone to be tested and going to the upside, right? That's one. this is one possibility. I would like it to really be outside like this, something like this. So if that's one, this is where I want to enter. Now keep in mind when I do these drawings, that the time axis is irrelevant, right? I'm not saying it's gonna happen here. It can happen. This guy can happen here, right? It can happen the very next day. It could go shoot up and come back down and shoot back up. I'm just saying this is the pattern that I'm looking for. I'm looking for the pattern to claim this supply zone and say, I don't want to go below this supply zone. I closed it, but I want to go above it, right? So that's one trade that I want to take a look at. The other possibility is that price jumps up a little bit, closes this gap. I mean, not gap, closes the supply zone completely. It closes the supply zone completely and then it falls, right? And it uses it as resistance and comes back down. Right? So it could do something like this. So in this instance, I don't want to jump the gun up here because up here could be similar to this, to where it's a small push out and then it reverses and goes back up. So I don't want to take that chance. What I want to do is I want to wait for price to go below the supply zone, pull back slightly, use the supply zone as resistance. We get an inverted hammer or something like this, low or high. Boom, we take a trade. So those are the two trades that I see in Qs. And the way the Qs and the spies are moving is the same setup for both. So I don't like to take, when two charts are doing the same thing, I don't want to double my exposure. I'll just take the trade on one of them. Like full position, one of them. Right? If you want to try both, you can just do half position. But don't do full position on each. But the charts are kind of moving the same way, so I have the same expectation. This trend line, supply zone up here, which we are at the supply zone with that trend line. So that's what we trade. Right, we're at that supply zone. It's acting like it doesn't want to close this supply zone fully. So we might get here, use it as resistance. So here, the slight difference between the two charts. In the Qs, we haven't gone above or below it. So we need to see some action before we get this circle. In the spies, we've already gone inside and out. Right? So this leg here to come back outside of it on the other side is already done for us. So we're only looking now for this leg to happen in the spies. The concept is the same. The leg has already taken place. So we take this trade to the downside. Or the other thing we want to do is price goes above, uses it as support, goes back above, and we take that trade. So here are our 4 trades in the Qs and spies. I want to end with one thing on a longer term. So Russell 2000 is mostly US based mid cap, and they're the fastest to crash. They're sometimes also the fastest to recover. But with that said, they are still near the bottom. they haven't recovered as much as the Qs or the SPYs. So there's like for a longer term play, there might still be some opportunity to like for like an investment kind of play to look at IWM. I just wanted to give you that something to chew on.
Okay.
Okay. So did I answer your question? You're on mute.
Yeah, no, definitely. Thanks, Vinny.
Yeah.
It seemed like a huge gap up over the last, week. Just a huge move up, just that entire. So I just wasn't sure, kind of, if you were thinking this is going to be just a continued push up, or if there's going to be some resistance, especially
Yeah.
looking at your time frame. It looks like we're approaching some pretty big resistance areas. So
Yeah, it's hard to tell, right? Right now, it's hard to tell.
yeah.
Spies now, they haven't come down as hard. They actually held 50%, and even that, it was just for 1 month. Maybe you can consider this one. This one didn't go as far, right? So just for 1 month, we touched 50%, and we've recovered since. I have a feeling when things go really down, the Qs will not go as far as the spies, right? So they now, let's say something like this. In the Qs, we've already gone to the 61.8, so we might come down to the 75 area, right? So this is something that could happen. So from this high, if we measure it to this, it's a 30% drop. In the spies, I'm expecting us to do the same, come back all the way down here, just because they want to play catch up. And this, well, if you get in this trade, is a little bit better, right? It's a little bit better, but not that much, but slightly better. So that's why, like, I think it's like about the same kind of drop in both will lead us to that 78.6 retracement. I think that's where we're gonna come, somewhere down here. And if we do that, then we're in this range. Whew.
When are we gonna get to our buy zone?
I know, we've been waiting. We've been like waiting like crazy.
I'm ready to sell all my Amazon stock.
Yeah. I'm really tempted to get some long-term options on the inverse, right? The ultra shorts. I'm tempted to get long-term calls, but really long-term, because I don't want to put too much into this. I don't want to put more than 10k into this, like max. So to put 10k, I can do it in stock, or I can just take like 3,000-4,000 and just put in like a leap option. Same result, same movement, better result with the options.
Yeah.
Yeah.
Like a year out? Is that what you mean by really long term?
It's a good question, right? Not a year out, because I think this whole thing, I think we will recover by October, November, if we start to go down by June. My expectation is between now and June is when a lot of the things could take place, like more bank failures, more unemployment numbers coming out, a lot of people that were laid off recently that don't get reported until May, right? When all those numbers start to come together. So I'm saying between now and June. So if that happens around the October timeframe, we should start to see recovery. I think the Feds, once we get it to some bottom that they're comfortable with, they're going to start to loosen up on the interest rate, right? They're going to start to scale it back. Hopefully, the inflation will stabilize by then.
Yeah.
Yeah.
So that's why my time frame is not quite a year out. I don't want to go until next April, but I want to go until October, November time frame.
Yeah.
It's a hedging play, right? It's
Mm.
hedging. That's why I don't want to put too much into it. Like, what if I'm completely wrong? Will I lose sleep? Like, that's how I want to think about it. So, whoever is listening to this, if your number is $500 to where you don't lose sleep, 500 or lower, then just do 500, right? You don't have to put 4,000. So you have to be comfortable with the possibility of that long-term option going to zero.
Mm.
Because I'm using it as a hedge, right? This is not. I'm U.S. market, right? I'm bullish U.S. market. So while I'm bullish in a bearish movement, I want to take advantage of the SQQQs have really given us an opportunity because everything is pushing up. So price has come down for us. But I have some at about 34. Like, I have the stock itself at about 34. And it's giving us more opportunities down here. We might even get, to the mid 20s. That'd be a great place to enter those hedging positions, but not full positions. Like, yeah.
Yeah. How much did it spike March 2020? I can't see your videos covering it. Like, could the COVID lows? Okay.
Yeah.
This is 23.
Yeah.
We're talking.
Let's
yeah.
go. Let's go daily. Oh. So the thing is, it's kind of hard for this one because they did a lot of splits.
Okay, they rebalanced and everything. Okay.
They keep splitting.
Yeah.
Okay.
Yeah. So it's kind of hard
Yeah.
to gauge, but yeah. I mean, they keep splitting so many times.
Mm.
But these are hedging, right? I just want to show you like how I think about my hedging positions.
Mm. Yeah.
I'm always conflicted with my Amazon stock. After they vest, I'm like, ah.
So here's a thought for me. This is how I think about those. I don't mix accounts. So where those vesting hit is an account by itself. So I look at that as a whole pie. Do I want just one stock in that whole pie? And so when I sell and invest into something else, that's still the same pie, but now
Yeah.
other stocks are sharing a piece of that pie. That's how I look at it.
Yeah.
Some people, the way they look at it is they look at their whole portfolio, every account as one pie, and still, even with that, your RSUs are a significant piece of your pie.
Yeah.
So how the percentage you have to gauge, right? Like people who start investing at a young age, the RSU is not going to be as significant compared to, let's say, a 401k. If you max out your 401k year over year, then if you look at the whole thing as one big pie, your RSU is not going to be scary in terms of allocation.
Yeah.
So you have to gauge it like that, right? And whatever works best for you. If separating it is easier for your mind, you separate it. If looking at it as one pie, um, my recommendation is you have some way of tracking it, like so that you know your allocation,
Yeah.
because you're tracking your whole pie. And once you know your allocation, the decision is very easy. Do I sell or
Yeah.
do I keep? As a very, very easy decision.
Why is it an easy decision?
Because if you're over allocated, you get rid of some,
Yeah.
right? It's because now we're talking about just allocation, purely allocation. I don't
Okay.
want all my eggs in one basket.
Mm-hmm. Yeah.
Yeah. Now, price is a different part of the equation that you have to look at. Like, is this the right time to sell? Yes, I want to sell 100 shares, but is today the right time? That's a part of the equation that you have to process.
Yeah.
Yeah.
Historically, I mean, it's that what makes it hard is historically it's just been going up and up and up. So it's like, look in hindsight, for 10 years, the right decision was not to sell. But then, unless, I'm saying like selling it and then putting it into like something way more diversified versus keeping it. But then now, obviously, we're seeing the flip side of not a 10-year bull market.
Yeah. I mean, I think it still has room to get back up there for you. But again, if you think about allocation, uh, and to some people, they're okay with that allocation. They're okay with everything that they have invested is just one company stock, right? If you look at Jim Cramer, he says at least five. Like I can't even do just five.
Yeah.
For me, I just need a little bit more, right? I don't want to rely on just five, and then what if
Yeah.
they all tank for some odd reason, right? To me, five
Yeah.
is a little dangerous number.
Yeah.
Somewhere close to 20, I think is good for me.
Mm.
But I also put a lot of money into the broader market, so which makes it easier for my decision making.
Do you mean
I'm
like,
not worried
yeah.
about bankruptcy. I'm not worried about earnings,
Yeah.
right? Because one company does bad, S&P says you're out. I bring somebody else in.
Do you allocate like a certain percent of your portfolio to like ETFs and then a certain percent to single stocks?
Yes,
Okay.
absolutely. The the single stocks, when they do great, that they're sexy.
Yeah.
When they do bad, that's a disaster, right? And so people want sexy here, and then they want safety here. So you can't have both. You gotta decide what you like, right? And for me, the easiest way to avoid the conflict in my head is the percentage allocation of each stock, and also the percentage allocation of stock versus ETF.
Yeah.
Yeah. And as your account grows, like for me, like about 85% is ETF. And I'm comfortable with that. When you have a small account size, then that 85% might be too much because you want faster growth, especially if you know how to do very good fundamental analysis. Like you really understand the companies and you buy the companies because you understand them, not because you heard somebody say you should buy this.
Yeah.
Yeah. Okay. I think it's good for the recording for today.